Hello and welcome everyone to another weekly market commentary from StashAway. With us again, our Chief Investment Officer on the line, Freddy Lim. Hey, Freddy.
Hello there.
How are you holding up?
I'm doing very well. In fact, I'm getting used to multitasking as we speak.
I can see that. But anyways, hey, it's good to have you with us again. Another week has passed. I think we're getting a little closer here in Singapore, at least, to the June 1st, right? We have, I think, roughly 2.5 weeks left. Let's see how this will be developing over the next few weeks. Hopefully, I think we're seeing a lot of reopening going on around the world, right? Starting with China, but I think now Europe, especially, even Italy, Spain, Germany, everyone is slowly opening up for business again. I was just seeing a video earlier today as well of some cities in Europe where people are enjoying their coffees again in cafes. So seems like with some social distancing measures, countries are opening up again. Same in the US is a little bit all over the place, but again, also some states doing that. So hopefully we'll get there sooner than later, and then also in a very healthy way, right? We did want to discuss a couple of things, right? We talked about earlier today that might be interesting for all of our listeners. And first there's a lot of chatter right now between the Federal Reserve and the government itself, right? And who is doing what in order to help the economy and help people out in this time of crisis. Do you want to give a little bit of an overview what's going on over there in the US?
Well, there's a slew of speeches made by a number of Fed governors. I mean, there's a chief governor, which is the chairman of the board, but then there's all these governors of different states, right? So Neil Kashkari came in and said the worst is not over for the economy. US Congress need to do more aids. So a lot of those were directed at the government. It's a posturing or signaling thing in public that you need to do more. We have been doing a lot, right? The central bank actually was the main reason why there's so much money multiplying in the system that really disconnected the financial markets right now from the real physical economy. But you also need to find a way to help the real physical economy, and the government needs to chime in more. So that was the whole bickering about. Market didn't take it that well last night. Because the statements were like, "Oh, the worst is not over. You need to do more." So it's sort of, I would caution our audience here not to overreact, because this is just people trying to communicate openly in public, signaling to each other, right? So do not place too much emphasis on it.
Well, it's the same with, Trump has been doing that quite a lot himself towards the Fed, right? Hinting again at negative rates. Sometime
He's finally praised them.
What?
He's finally praised them for all the efforts
Yes.
about 2 days ago. Yeah.
So back and forth. But like you said, not too much for us to worry about here, and just watch and observe more. China, there's some news, right? Circling around, and maybe you can give a little bit more insight on that. But apparently a bigger stimulus package is being prepared and hopefully even deployed throughout this week, right? Do you have anything there?
Let me see. I got the Caijing from China, which is deemed as the official channel media, and it's in Mandarin, so I'm translating from it. And yes, it does say things like China central government is planning to announce a 10 trillion RMB stimulation plan at the upcoming National People's Congress meeting. And that's to be held on the 22nd of May. So it's about
a week, right?
9 days from now.
Yeah.
Yes. And however, China so far has refrained from the pump and dump strategy that you tend to see them do in the past. They were trying to really clean up the systems, the amount of bad credit in the system, right? It's been a multi-year effort. So they have been refraining to it. They have locked down the mills, really. They haven't completely untold yet. So if you say that China has really locked down 3+ months, this 10 trillion yuan is worth only about 10.4 percentage point of GDP in China. 10.4 percentage point of annual output. If you want to completely replace the lost output due to the lockdown, you probably need to do more. You probably need to do up to 25 percentage point of annual loss output, right? So this is probably the beginning, hopefully, not the end.
Yeah. So no, good, but that's good news. At least something is moving there, because people were already waiting kind of for this right now for quite some time. Hey, why are they not doing anything? What are they waiting for, kind of thing? Now with the economy opening up again, probably a good time to ignite some of that economy back in, right? Thanks, Freddy, for those updates. We did get quite an interesting question from Sebastian on last week's video. And it's actually a few parts that he would like to know about in the economy. Let me just read it out to you, and maybe we can go through the different sectors that he's mentioning there in a little bit of more detail. He said, thanks for keeping us informed. I'm less worried about the near-term fluctuations. However, I do wonder which part of the economy will change faster in the long term. What are your views on sectors such as energy, travel, real estate, REITs, and so forth? So maybe we'll go through them one by one really quickly, because I think a lot of people will have that question, right? Because obviously, we also always say, hey, different asset classes, different parts of the economy do better in different economic times, right? So I think this is where this comes down to. Let's start with energy. Obviously, energy we talked quite a bit about, right? This quarter, because of the oil crisis. Where do you see that sector going?
Look, thank you, Seth, for the very thoughtful and all-rounded question. First of all, I want to acknowledge I do completely agree with what Sebastian has said on we are less worried about the near-term fluctuations, right? We need to think longer, think more forward. And so I just want to say that when we update you with near-term events, is to help you quickly get up to speed. And in principle, we want to bring it back to the long-term philosophies of investing, right? That really work over time, trial and tested. So this is one opportunity to do so here. Now, we have always said that the market is going to disconnect from the real gloom and doom in the physical economy, but that's at the aggregate level, right? Like, for example, the S&P 500 consists of a market value weighted average of across 11 industries, right? Some of those industries could be damaged for a very long time, and some of them are actually benefiting from it. In particular, technology, telecommunications, pharmaceuticals, these are sectors that would continue to do well, right? There's a long-term theme here. However, coming to your question on energy first, energy is really quite, you can almost say that it's going to be a long while to recover because there's been a lot of credit risk taken by the banks. You've seen news on a lot of banks writing down bad loans, right? Even in Singapore, we have a couple of high-profile companies in the energy and gas sectors, right? We have scams. We have a lot of news coming out of sectors. So in general, there's going to be a lot of write-down of loans, non-performing loans, back debts made by the banks to oil and gas companies, right? That's coming up. And it's going to take a while for the sentiment of banks, right, or people who lend money here to resume their sentiment to re-lend in this sector again. So it's going to be hard for energy companies to secure financing, right, for projects. And especially the supply-demand outlook is still towards the oversupply, right? We've seen Saudi Arabia recently announce unilaterally on its own, without anyone saying yes or no, on their own, they announced another 1 million barrels a day of reduction in oil output. That is still not enough. I think the oil market, if I'm not wrong, is still about 3 million barrel a day oversupply. So that is not going away soon. So don't get excited by the price action.
I think for energy, for sure, if we switch gears, especially for Singapore, right? A lot of people here like their REITs, right? REIT investments. You know, we use some of that as well in our Singapore income portfolio. How's that sector affected when you think about real estate?
REITs is a good one. Very dynamic, very rich in flavor. So let me try to pin it down. At first glance, you may think that they're going to be affected, and yes, they are going to be, right? The people are not going to mouse as much with all these circuit breakers, volumes down, right? But if you have a REIT that's on data centers, that's going to work. We all work remote. So there's many kinds of REITs out there, so you got to do your homework. But as a whole, in terms of market value, the REIT sector is most heavily geared towards commercial REITs like Mouse, right?
Mm-hmm.
And residence is actually, I think, is smaller than commercial REITs. But there's also logistics, warehousing, data centers, and all. This is very rich in flavor. Now, the REIT sector benefits from lower interest rates because as long as they don't go bust, so if you're talking about long-term operator that's been through 98, 2008 crisis, and they're still around today, those fund managers, the big ones with track record, they're going to be around. So as long as they're not bankrupt, those REITs are going to benefit from a lower interest rate environment. They're going to look more attractive to investors, right? Because they're higher yielding. So that is one good part. But at the same time, on the growth component is also exposed where less people are going to mouse, hospitality is going to get hurt. Maybe office as well, right? People are now working more remotely, and preparing companies are even talking about longer term preparing to work from home strategy, right, for employees. I think Amazon, Google, Apple, all the big tech firms, even ourselves at StashAway, we are completely ready to respond to the dynamic situation and completely work from home. And tech firms have proven completely that they're able to handle it, right?
Yeah, I think there was a memo today actually from Twitter that Twitter said to all the employees, it's up to them. So they will open the office, but if no one, they don't have to come in ever again. So it's forever actually the rule now.
So it is likely that even after June 1st in Singapore's case, when we break out from the circuit breaker, but the safe distancing measure, I think, is likely to be in place, right? So it means that human volume to miles are not going to be as before. And people going to office, you probably still have to wear a mask being in the office and checking in, checking out. So maybe that still means that we're not going to just recover just like that because it's 1st June, right? It's going to take some time to safely get there, which leads me to the final bit on travel. Hotels and airlines is also quite permanent, quite long-term, the impact. Just imagine if I have to visit someone in Japan for a few days, I'll get quarantined for 2 weeks there at the moment. I visit for a few days, I come back, and I get quarantined for another 2 weeks. So to spend 3 days there, I need to spend 1 month in quarantine. So
that's not going to happen, right? So most people.
So those dynamics are not going to change yet until we have a clarity on vaccine, right? On how we're going to deal with the virus better, right? We're still trying to understand the situation. So those things will take time.
Yeah, no, thank you, Freddy. I think good question, good answers, lots of insights there. If you ever have any other questions, you always are very welcome to leave them down below in the comments, because if you want to be featured with your question, we pick them up on a weekly basis, and Freddy and myself will be covering them. So if you do, just drop them down below in the comment section and we'll get to them. With that being said, we do have an upcoming webinar in Malaysia. It's on the 20th of May. It's called How to Invest the Right Way with ETFs. So we'll walk you through on, how to pick ETFs, what to look out for, and how they can be built a part of your portfolio as well. So this is on the 20th of May for our Malaysian customers. You can sign up for that on our website, as well as on Eventbrite or Facebook, up to you. So with that being said, Freddy, thanks again this week. We'll be all with you again next week, still from home, but we're getting there. So everyone, please hang in, and we'll be with you again shortly. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.